the more I look over the data, the more I realize that this is definitely a wealth transfer opportunity, an opportunity to make very large returns on your money. All right, I'm going to be showing you all what I mean by that. But before we get to it, could you please take out the time to like the video if you like the content, to help spread the word, all right, to help spread the channel. I would really appreciate it, and I just would appreciate the support. With that being said, let's get right into it. As you all know, in the previous couple of videos, and I'll link those in the description, we talked about just where the American savings what the American savings accounts were looking like, right? So if you actually take a look at this chart here, you can see that the American savings chart, the American saving is pretty much depleting at a crazy rate, right? The prediction is that Americans will have no savings next month, right? At the end of October, right? All savings gone. So we've already talked about that. We've also already talked about how the United States credit card debt is expected to go through the roof. It's already at all-time highs, but it's expected to go even higher considering there'll be no savings and people still have to pay bills and still have to maintain their life, right? So that's actually something to think about. This is stuff we've already discussed. Also, on top of that, to make the situation even worse, we've got student loan payments starting back October 23rd, which is next month, which is in a couple of days, right? So when you put all of this together, you end up in a situation where we have no money, right? We have credit card debt at high interest. Student loans are back to make it even worse, right? And another piece of data that I've ran across is that the bankruptcy filings are starting to hit all-time highs. So as of January 2023, we're reaching all-time highs, and I believe today is probably at all-time highs. They tend to chart this stuff out and report every January. So I'm expecting January of next year to see these numbers even higher. Okay, so this is very interesting. People are running out of money. They're going into credit cards. They're filing for bankruptcy, and as you can see, everyone's been depleted, right? So this is pretty interesting stuff. So if you actually take a look here, you can see the federal fund rate, okay? As you can see, we're at 5.33%, right? So this is the rate in which banks lend money to each other, okay? 5.3. We receive money using the prime rate, which is usually 2% more than the federal fund rate, all right? So if you try to go get your mortgage on a house, you're gonna get the fund rate plus 2%, plus extra percentages that the banks put on top for profit, right? So you're going to get a mortgage for 7+%, right? Which is the fund rate plus 2% plus more fees, right? So if you actually look, that's why mortgages are 7%. So no one wants to buy a house. No one has money. Credit cards are going through the roof, right? So you got this crazy situation where no one has money. They're being depleted completely, okay? And when you actually tie it together, you see exactly what you would expect, right? This chart says the U.S. labor market loses steam, job openings and resignations decline. So that means openings are leaving, drying up. And it also means people are not resigning because they're not confident they'll get another job, right? So all this is happening at the same time. And you would expect that to be the case because when the federal funds rate is high, that means companies don't want to take out loans because it's too expensive, which means they don't want to grow. They don't want to expand, right? If they don't want to expand, they stop hiring. If they stop hiring, people lose jobs and job openings dry up and people stop quitting jobs because they have to make sure they can pay their bills because they have no savings and because they have credit card debt and and expenses. And this is all interesting, right? On top of that, you've got this very interesting information where the prediction is that Bitcoin ETFs, and we all know what a Bitcoin ETF is. I won't go into that, but there are major companies applying for Bitcoin ETFs, and we believe that there's a 75% chance that those will be approved this year. 95% chance that they'll be approved by end of 2024. So when you think about this, right, you've got the American household going completely broke, right? and it being student loans making it even worse, right? You've got interest rates going up, jobs drying up to ensure that the American has no money. So there are all these things happening. And when I pay attention to this close enough, it starts to tell a story, and it almost seems manipulated to me, right? It seems manipulated very interestingly because these ETFs are going to be released. Buy pressure is going to be on Bitcoin, and then hence the best buy opportunities, right? And no one's going to have money, and I think that's very interesting. And then when you look at 2024, to make matters more interesting as well, is in 2024, we have presidential elections. So, presidents like to, it's very common for a candidate to seek a healthy financial market when they're going out of presidency in order to increase their chances of doing well, right? So this is actually something that's very common when it comes to presidential elections. So you actually think about all this stuff together, and you kind of get an interesting kind of pie to chew on, right? An interesting stew of information. Also, if you check right here, if you look at the Bitcoin exchange balance, right? If you look at this blue line, that's how much Bitcoin is actually on exchanges. And if you look at the yellow line or the gold line, that's going to be how the price of Bitcoin. All right. So if you look at this blue line, it's been on a downtrend since 2020, March of 2020. And it's been on a continuous downtrend. Even when Bitcoin was going down, this blue line is still going down, which means people are pulling money off of exchanges, pulling Bitcoin off of exchanges, even though the price of Bitcoin is going down, right? While the price was going down, they still were pulling Bitcoin off, which means someone somewhere is pulling a lot of Bitcoin off exchanges, which means they have confidence in Bitcoin. They don't plan to sell the Bitcoin no time soon, because if they wanted to sell, they would actually move Bitcoin onto exchanges. So for a very long period of time, we've seen Bitcoin continuously being taken off of exchanges, right? So this is very interesting to think about when you actually put this whole pie together. So when you actually draw that out, it's kind of interesting because you got the American dollar. It's going down quick, and it's pretty much spiking, and it's going to be at the bottom. This line here is next month, right? So this is like October. So we're supposed to into October have no money. Okay. The ETFs, the Bitcoin ETFs are supposed to be approved somewhere from the beginning of us not having any money, right? When you look at the dates, right? This is ETF 1, right? And then somewhere between there and 2024. This is the beginning. I'll put the beginning of 2024 right here. So here, excuse me. All right. So now this is going to be 2024, the beginning, and this is going to be the end. So we'll call this ETF 2. F2. Now you've got the American running out of money here in October, which is next month. You got at that very moment. Also think about this. Next month, student loans start back. Next month, the American has no more money. The credit card debt is already spiked. So at this very moment, the percentages of ETF approvals go to all-time highs, meaning the chances of getting an ETF approval go through the roof at this very moment. I can't even make this stuff up. I didn't even try to find this information. It's right here in our face, right? So that's all the stuff happening. So this is the ETF gap. This is also the spot where no one has any money. Presidential elections start in 24. So we're going to start getting all these advertisements about presidential elections starting all in here. So presidential elections, the market is going to have to go. Let's call this election time somewhere in the middle. Let's call this elect. So the elections kind of start here, as far as all the election campaigning. Well, that's going to start earlier, but all the heavy duty stuff is going to come to a resolve somewhere in the middle. And that's here. Okay, so all of this stuff is happening, making us have no money all of this time. The market's going to recover somewhere around here, around going to these elections, right? So if this blue line, we're going to try to draw what the market should look like. The market, so right now we have interest rates rising. So if interest rates are rising, the market is going down because it's like, we don't want to expand. We're losing jobs. The market's going down, 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 just like the Bitcoin price is going down, down, down. And you would think people will be buying, but their income is going down, 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 and the jobs are going down, down, down. So everyone's poor. So then the people who have money, they're going to start buying because look, the blue line is going to be the markets. It's going to be Bitcoin. It's going to be Bitcoin, all these good assets, right? Not real estate necessarily, paper assets, risk assets and stuff like that, Bitcoin included. That's the blue line, down, down, down. Now you also have to have interest rates, right? So interest rates, this is the market. Interest rates is going to be this green line going up, 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 up. They just halted the interest rates, but there's talk that it's going to go up, 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 and then it should start to go down, 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 right? Leaving the markets in a healthy. So once you put all this stuff together, right? You got the red line. This initial red line broke in October. That's the American, right? Credit through the roof. You've got interest rates going up right now, which is helping us lose the jobs, which is helping us not have savings because we can't have jobs and all these things, right? And we're broke. The interest rates drop. When the interest rates drop, notice that the Bitcoin price was already low. People with money have already bought. As the interest rates drop, now the loans get cheaper, and then the market turns around near the presidential election, right? As the market turns around during the presidential election, we start to have more money coming back into the system. We have more jobs starting to be created. All this stuff takes time, but when you kind of time it out, long story short, the wealth transfer has already happened, right? So where am I going with this? I don't think that the wealth transfer is going to happen. And the reason the wealth transfer isn't going to happen is because no one's going to have money to invest that already does. The normal American won't have any money, right? So it's going to be a rich get richer scenario, okay? And I've looked at this a million times. The more I add more data to it, the bankruptcy data is the latest data I've added to it. It becomes more and more apparent that it's a rich get richer scenario. No one will have money to invest in this little, black area here. This little black area, right here. No one has money. Interest rates will finally start to taper probably early next year. Okay, we're going to look at a better economy starting mid to late next year. Okay, we're looking at ETF approvals coming sometime next year. And we're going to see the best prices of Bitcoin in the next eight months. I think you're going to see Bitcoin hit. I believe it's going to go down, retest low 15, 20,000s. And no one's going to be able to buy. Okay. And that's my hypothesis. All right. So I've been dollar cost averaging, as you all know, but I'm actually fascinated in these concepts because I believe when these lows happen, when we see the credit card debt through the roof, we see the Americans have no money. I saw more data saying that there are 2 jobs per American. Like as of 6 months ago, there were like 2 jobs per 1 job applicant, right? The prediction is that by 2024, we'll be seeing 1 job opening per 2 applicants, right? So that's going to be a situation where I expect the price of Bitcoin around that time to be the best price, right? Credit cards are through the roof. Savings are tanked. And Bitcoin is the best price ever and no one can buy. And I have buy orders, right? I have buy orders at 20,000. I have buy orders at 15,000 and buy orders at 12,000. Okay. If these buy orders hit, that's the wealth transfer. I have an opportunity to make more money than I should make just because of the economic status, right? The construct of the economy at that point, right? So what do you think about this? Do you think a lot of this stuff is manipulated? Do you think that the powers at be are actually manipulating this stuff so that the general population remains poor and the rich remain rich? Do you think that's happening? Me personally, I just take advantage of the data I see. That's what I'm going to do, and I'm going to demonstrate it all to you all and show you all what my portfolio does so that you all can see the results of all my conclusions and my actions. But I'm just curious to see how everyone feels about this, and will you be participating? Okay, with that being said, I'm going to leave the video there, everyone. I'm going to try to be more consistent with the videos so that I can keep bringing you all value. If you like this content, hit the like button. I'll see you on the next video. Peace.